Okay, I should be recording.
All right, let's go. But hey guys, what's up? It's one of your co-hosts Matthew Preston here with other fellow co-host Thaon Simss. Here on, let's check the date, June 25th, Saturday morning, bright and early. Ready to discuss some stocks.
A bit too early.
Yeah, a lot of stuff been happening on the market this week. I know Thaon been a very profitable week for Thaon.
Oh my god, you guys started like that.
What's my first name? Real. What's my last name? Rich. So what's all of my name? Real.
Very, very profitable.
I guess. I probably should have doubled down on that play, but
yeah,
still a decent profit. Still a decent profit.
Yeah, sometimes it's just hard the monkey money,
Yeah,
I think I've definitely learned a lot. I think I said it in our group. I was saying that I wanted to, or I think I'm gonna give it like a rule or for myself that whenever I'm gonna put money in a stock, it's like I'm going to raise the minimum amount, because I'm now seeing a lot of these plays that I had put some money in initially, and I was supposed to track it and then go back to it and put more, but I didn't get around to it, and it was to my detriment. Like on my money JA, I have separate portfolios, so I have my main portfolio, and then I have like a little, I was calling it a lotto portfolio, because like there's some more, I'd say more risk. Most people would say more risky plays, or but I don't even necessarily. Was SSLVC really risky?
depends on who you're asking. To be honest,
Depends, because when I look at some of the stuff, it really wasn't that risky, Because they had paid off. They had paid off the debts, like they owed. Like you don't just pay off debt and then buy a company to go delist it. There's a reason you're doing it. But like
exactly.
I'm looking at my SSLVC, right? I am up 72%. And I bought, the first day I bought was March 21st this year.
Okay, but why'd you buy? Oh well, you just said the reasons.
Well, it wasn't just that, but well, I guess which way we should say it for like anyone that doesn't know. SSLVC or
Stocks and Securities Limited.
Yeah, Stocks and Securities Limited, Venture Capital Jamaica, right? Basically, they were like a private equity firm.
Yeah, true. Because venture capital is a form of private equity. So basically, those firms, they would finance a lot of companies. Venture capital is more like early stage companies, so like startups or some very early stage companies, right? But I think I watched one of the YouTube videos that Mr. Hines, he was talking about MFS, and so MFS is buying out.
Wait, what is
most
MFS?
of the shares. Was it 70? What is MFS again?
Microfinance Solutions.
Finance, yeah. Microfinance Solutions, yes. So they're buying out, was it 79% of SSLVC? I need to actually check that.
They bought it already, I think. They bought it already.
Yeah, the date was... We should actually be checking these things. But yeah, so they bought SSLVC, but I think their focus is no longer on startups. I'm pretty sure Mr. Hines was talking about the focus shifting to certain companies.
You mean, the thing is, MFS, I don't really think used to invest in startups, or I can check. But you're saying that
SSLVC is now MFS.
Well, okay, I get what you're saying.
So now they've changed the focus of SSLVC. So it's no longer SSLVC. So they're no longer primarily focused in venture capital. They want to now invest in bigger companies with a certain amount of revenue base. So yeah, I mean, to be honest, you were saying about the play being risky. I don't think the play was that risky. Because because MFS can pump a lot of money through SSLVC. So,
And the thing is,
and if you look at
also
No, go
men's the
ahead.
difference between SSLVC and Siboney. SSLVC got an offer, and you even knew who was buying it. Versus Siboney right now, I think the last notice Siboney came out with. Let me read the exact notice. This notice came out June 1st. The directors of Siboney Group wish to advise that further to our communication that they gave out the 28th of February this year, we understand that the majority shareholder is in the process of pursuing the finalization of a decision in respect of the sale of its 72% shareholding. So they're in the process of pursuing a finalization, and then they said they will give us a further update. So, I mean, to me, it sounds like they have an offer or offers, and they're choosing. I mean, the only thing is that they aren't really giving a timeline. I think in the past they had given timelines that they said they were going to try to make a communication by this time. So,
I mean, similar. So Siboney run-ups, because all right, you started this whole thing about me making profits this week. It's off for Siboney, right?
but not just
so I bought the
Siboney.
day. Not just Siboney.
Yeah.
I mean, dollar was nice, but we soon talk about that. Siboney's previous run-ups have been off of news like this, right? So I actually bought the day after this news release came out, just June 2. If I look on my portfolio, I bought at 81 cents. Yeah, on June 2, literally the day after this. And I was kind of shocked because I was wondering, why is the price not running up? Did no one else see this notice? And certain news articles
The market
in the
is
past,
slow.
I guess.
The market is slow to react to good news and then fast to react to bad news.
So I was wondering why it's not running up, because in historical events, Siboney's run-ups have been because of somebody, or just like speculation, conjecture about people or an entity buying out the majority shareholdings from Finsac. So Finsac owns most of Siboney. So yeah, I mean, it paid off this week. I sold. Which day did I sell? Yesterday? I'm so tired. I was post-call yesterday. I sold at $1.70. So that's a
That sound like
109%
almost the
gain.
peak.
Yeah.
That sound like almost the peak. Wow. So why did you sell?
I mean, I hit 109%. My goal was 100%, but I don't think I was. So as I said, it's kind of hard to do those kind of plays while, at work and so on. Like, you see patients, so you kind of have to stop seeing patients, and you don't want to run out the patient. Also, like, that's not ethical or so on, right? And then I think there were no more dockets left, so I was just like, all right, let me check my phone. And I checked my portfolio, and I checked the market, and I saw Siboney. I was just like, wow, I could just sell. Normally, I would put in an order though. Normally, I would put in a sell order from long before. I don't know why I didn't. I guess I've been extremely swamped.
Next time, what you could maybe do is set an alert. Yeah, could the phone can
Definitely.
text you.
Definitely.
Yeah, but I
See, those little tools are so helpful.
Hold on. So you're saying you bought June 2nd this year, which will and so 1, 2. So a little over 3 weeks, you made 109%.
Yeah, bro.
Wow, that's pretty impressive.
Actually, yeah.
I actually have like a little Siboney, but it's really monkey money. I'm looking at it now. I bought at 76 cents. I'm up
Nice.
109%. Wow, what the hell? I bought
crazy.
March 21st.
Why'd you buy?
Well, I know that there's the possibility of the buyout. I think it wasn't this notice I saw, but they had dropped the previous notice. And so I knew that within, like, for example, I know that there is somewhat of a timeline on Siboney, because you know that they have a limited amount of cash. So they literally, it's either they get bought out or they get delisted. It's not even like SSLVC, where I guess SSLVC still had some, more shares in some companies and stuff that they could at least technically sell.
SSLVC was still making profits off of the sale of, I think they're the ones that possibly sold Fosterich. I think they sold.
They sold Blue Dot too.
They sold Blue Dot.
Yeah, so they at least had some money, and the timeline was different too. So, with SSLVC, they could have remained listed for a bit longer, but like with Siboney, they're literally at the end of their days. So they either get bought out, or they wouldn't be able to pay the listing fees and such, and they'd have to get delisted. So there was, I guess, some timeline on that. So I'm like, I know that this company is gonna get bought out. I don't know necessarily which company is buying them out, but I can't wait till the end of the race to bet. You have to take the bet before, or it's not you can't, but I don't want to do that, because if you wait for the news that, say such and such big real estate company is buying them or whatever, and then they're gonna be pumping money into the company and all of these things, it's like I can't be waiting for that to happen. I want to be owning the shares from before and then selling to people when they hear about this news.
Because that's when everyone else would be buying. When the news comes out and everyone says, this big company is buying them out, these are their plans and so on, everybody would be buying. That's when you'd want to be selling. I wish you'd put more money on it still.
Yeah, I remembered Shaq, my brethren Shaq was telling me like there was a point in time he was like, bro, I just want you to put X on, like he said, an amount of money. I just want you to put this money and save on it, bro. Just put it in, just for me, like. But that. And there was even a point where he said that if I lost money, he would like try to cover some of it or something like that. But then he said something like that, and then after I called him out, I was like, wait, I would do it still. But he was like, nah, never mind. And I should have just said yes when he first said it. Cause look at this now.
Look at Siboney, exactly.
The only thing is, I think technically he would have wanted some of the profit. But I mean, for me, technically it would have been like it's like I couldn't technically lose, I think, for depending on, I don't know what the exact terms would have been, but yeah. It's funny, it's dropped. And yeah, it's dropped. I'm still up 100. Because that's the thing with the cent stocks. You think that, okay, when like a dollar stock moves to $1.50, that's 50%. But then if you think about it, like a 76-cent stock moving to $1 is not the same. Like, what's the actual? Let me actually pull up the numbers on that. Like, a cent stock can have a small, like, cent movement, like just cents, but the percent is really high. So, for example, my Siboney at the 76 cents, right? If that goes to $1, that's 32%. If it goes to $1.02, that's 59%. And if it goes to $2, that's 165%. That's crazy.
Yeah.
It's like I guess that's one of the reasons why I used to like look at QWI. When it's QWI's time to shine, that could be a really, really nice play. You're buying at 80. What QWI is now? Or like 90 cents, 91 cents. Yeah.
I mean, my thing is you have to be putting in money still, because I guess you now know, because as you say, you put in monkey money. If you did put in a little bit more than monkey money, it would have been, you would have really reaped the rewards. And I mean, scared money don't make money. Sometimes you really have to just risk it for the biscuit. So, yeah.
Yeah, man, I'm learning a lot this year, man.
Trust me. It's a year of a lot of lessons. A lot of lessons. Even dollar taught me quite a bit still. But I would say I think I got the price predictions of dollar low-key spot on. And then even the dip and how the dip would be a bit sustained, because sometimes the dip is just maybe for like a day and bounces right back. So like right now, dollar is trading at what? $2.80.
Close at 278.
278. What do you think about dollar? What do you think about that? It closing at that price. Is that an attractive price for you?
Well, I mean, I've I've been buying. I think my strategy. So let me see. So I applied at IPO, right? And then I also bought $3 low, and then I sold most of my units at like $3.50. I knew it would likely peak around that price based on like what I was seeing in the queue.
Yeah, you're seeing a lot of trades go through.
It wasn't just a lot of trades though. It was more
the sell orders as well.
Well, the ratio of supply to demand. So I was basically like, you could tell that in the early days of dollar, right? Well, hold on. I feel like we should try to explain the queue. I think some people don't understand when we talk about the queue, right? So the queue, when we say queue, what we're referring to is basically the buy queue and the sell queue, right? So when you're in stocks and stuff, you have, it's almost like a order list of the amount.
I think of it as like an auction. So you have bids and you have sells. So the bids, you can see what people are willing to bid at. So the price points that people are willing to bid at and the amount that they want. Right. So say you want to buy $1. Right. So you put your money in at say $3. You put a bid in for $1 at about $3. And let's say you want 100 units at $3. You can see that in the queue, right? You're lined up in like it's like a line. It's like a queue, an actual queue. So that's how the queue works. And then you have the sell orders as well. So if you see somebody selling dollar for $3.20, right, and you want that, you can offer to buy. You can put in an order and buy it, as long as it's kind of like at the top of the sell queue. So as you go down in the sell queue, the price point becomes higher and higher. I don't know if that makes sense.
Well, yeah. So it's like if you go to a market and, imagine you want to buy some apples or something, and there are like 10 different vendors, 5 on one side, 5 on the other side, right? One vendor is selling the apples for $10. The other vendor is selling the apples for $11. The other vendor $12, and they're different price points. But imagine if we were to then arrange them in order of cheapest, most expensive. Expensive. So then the $10 person would be first. They'd be at the top of the queue, and then anyone who wants to buy from the apples, they would first be able to buy the cheapest one instead of buying the most expensive one. And then so after those apples selling for $10 get bought, if no one else wants to sell for $10, the next cheapest price would be then $11, and it would just go down like that. So that's basically what we mean by the queue. But what I'm saying was that how I knew that dollar would likely dip and why I chose to sell that day was based on the queue. So there was basically, in the earlier days of dollar, like the first few days, the demand or the buy orders was a lot higher than the sell orders. So if you were to do it in, like, for example, a ratio, imagine there being 20 times, 30 times more buy orders than sell orders. So you'd see a lot more people want to buy it than people want to sell. So if you go back to supply and demand, if there is low supply but high demand, that will cause the price to go up. So that's why dollar kept going up, because people really wanted the shares, but not that many people wanted to sell, or not as many people wanted to sell than the amount of people that wanted to buy. So that caused the price to go up. But then on the day that I sold, when I looked at the queue, the demand in relation to the supply, the ratio wasn't as high. So the demand was still maybe a bit higher than the supply, but not way higher like the other days. And so I knew it would likely drop. And the thing is with IPOs, if you look back at a lot of them, after they typically peak, they typically start to drop after, because if you think about it, people start, like, remember, the market is, there are people in the market, so they will a lot of times start to sell because, for example, people, they'll invest in this, they may not necessarily know, they may have a goal in mind. Oh, I want to sell dollar at $2, but then dollar goes to $3 and they're like, it's at $3, maybe it can go $4. And then they watch it, they'll just watch it. But then it's like, if you see it peak and you start seeing it drop, you'll be like, maybe I'll watch it a little more. I don't want to lose my money, but like, maybe I can watch it a little more. Maybe it'll start go back up. And if it drops again and then drops again, that's when people sometimes will, be like, okay, let me just sell, because I guess I was wrong. Thought it was going to go to $4. I watched it go up to $3, it started to drop. Let me just sell. And so there's usually like a little dip after. So there's like a peak and then a dip. So you can sell at the peak or close-ish to it and then buy back in with more money. You'd have more money because you sell, and you can get more units of it.
And you can kind of because you could see how many new people it brought to market or how many people actually invested in it. So, a lot of people have 10 grand units all over the place and so on. And a lot of people are new to this. So imagine you're new to the market, right? You put in, let's say you put in 10 grand and you got your 10 grand allocation, right? You now see this 10 grand triple up. So that your 10 grand is worth 30 grand. You're just like, yo, I need to
200% in like what, less than a week.
Exactly. On your first investment, well, I must sell that, man. Collect the profits. Buy gas with it or do whatever you want with it. Or buy a Bridget's or something, I feel like a lot of people would do that, and you could see the selling pressure increase. You could see it at around $3 and so on, and now it below $3. But for me, I like dollar below $3. I really like dollar below $3.
Oh, so you've been buying?
Of course.
Oh.
I've been buying at the 270s region. So the high 270s.
Nice.
I mean, if you've met the company, they've gotten so much new cash now from the IPO. I mean, their IPO, they raised what, 500 mil? Yeah, I mean, some of that money is going to be used to expand their loan book, right?
It's like
so
200, around 200 mil.
So now you have that cash, and now you're able to lend out that much more cash, right? To therefore generate that much more profits. So to me, and then where you lending the cash here, you could also lend it in Guyana as well, right? You can loan it out, and that I see that cash finishing quickly. I think Kadeen Mears, he said 3 to 6 months, all that cash should be fully like loaned out. And with to me, like 6 months sounds a bit. I'm actually not sure. I'd have to look back. I want to see the first.
Over deliver.
Yeah, under promise, over deliver. That's facts. Because with IPOing, there is always the hype and the marketing of it. So a lot more people now may flock to the business because a lot more people now know about the business. Right? Everyone is talking about dollar. Everybody. So.
And remember that they may be able to do some acquisitions.
That's what I was about to say. The Microcredit Act should be enacted next month.
I think is it not enacted? No.
I feel like it was July. So they could acquire a lot of other companies, other microcredit firms as well. You could use some of that cash to do that. And acquisitions, you could see that increase in revenue and profits almost immediately. If it's a profitable company, of course, you would see that
immediately accretive to earnings.
Immediately accretive to earnings, yeah, bro. I mean, I like dollar going forward.
Well, bro, I was looking through some articles. SSL used to have a stake in dollar. I think SSL actually sold their stake to First Rock Private Equity, I think. Let me see. Yeah, see article here. SSL complete sale of Dollar Financial. So yeah, that was another point on SSL. This was March 2020. So this was in the initial stages of the pandemic. Let me see. Yeah, so it says the sale of the Montego-based Dollar Financial, 7 branches spread mostly across rural Jamaica. First Rock Capital. Oh, it's not First Rock Private Equity. Oh, First Rock Capital has acquired controlling interest in Dollar Financial for an undisclosed sum. Yeah. Interesting.
Right.
Yeah.
As I say, I do like dollar going forward.
Yeah.
People need to just sell their shares to me. Just continue selling, man.
Yeah, look like
because one of the days, soon enough, the selling pressure is gonna decrease. A lot of the flippers are probably out by now, and so on. So we'll see what the price does. I'm curious to see what happens next week. I personally don't think it will stay under $3 for long. That's just me personally. I give it a week. I give it a week. We'll see.
Yeah, I mean, it still might dip a little more still. I wouldn't be surprised if it maybe touches $2.05, but I doubt it would. I don't think it would like actually stay there for long. It might just, for example, someone just sells down into the buy queue and it will hit $2.05. Maybe it halts. I don't know, but I don't see it staying down that low because I think too many people would be buying to keep it that low. But I mean, who knows? We'll see. That's why my plan was really just to start staggering. Like I staggered my buys and stuff. But yeah, I'm comfortable with my price on dollar.
Yeah. Oh, also, we posed that question, didn't we? To just people on our Instagram page. Guys, if you're listening to this, follow us on Instagram. I think our name is limitless_pod. Yes, limitless_pod. To follow us on Instagram. And one of the days we
follow us on Twitter too.
Oh yeah, facts. What's the Twitter handle?
1 sec. Limitless_pod.
Nice. Well, yeah, we asked any questions about stocks that anyone wanted to talk about. Let's pull up another questions. Okay, so how much money would you say is a good amount to go in with as a starter? That's a good question. So when you're just starting out, you're kind of unsure about how much to start investing with. A lot of people think you need a lot of money to start investing with. Some people, well, with dollar, I mean, they got 10 grand. And that is a lot of money to some people. So to me, in investing, you have to remember there is always a risk with investing. So I would say investing is very personal. So you have to invest with how much you're comfortable with risking.
But losing. It also be good to have a goal in mind. So for example, before you make the investment, think about how much money would you want to make from your first investment. So you don't necessarily have to say percent. You could say the dollar value. We could say percent and dollar value. So say, for example, you're like, I want to make $10,000 from my first investment, right? Or I want to make $50,000 from my first investment. And you can also try to set a time period. So if I want to make so let's use the example, $50,000 within 1 year, that's where the amount of money can kind of help you. So if you are looking for, say, like a 10% return, you can then work out, okay, how much money would I have to put in for the 10% in a year to give me the $50,000 I want, right? Like you have to think about how much you want, both the percent and the dollar value in the time, and then that can kind of help you.
What I would do is, and I remember when I just started investing, the whole market itself in 2019, I think it went up by 30%. So I was trying to just beat the market average. At that time, there was a nice bull run. So my goal was to try and beat the market itself. So you kind of, you have to now see, you have to look at things like that, right? I mean, a lot of people want 300%, 500%. They want to make a mill from 100 grand and stuff like that. And you have to see, is that really realistic?
Some pajama numbers.
That's some pajama numbers.
If you know,
be
you know.
yourself.
Yeah.
Right.
That's
so
always
that's
a big thing, you know. Like sometimes when some people, like we start talking about stocks, and then I'm like, I always try to say, yo, what kind of returns do you think you want? Some people say like they're just getting into investing, just starting to take it seriously, and then they're like, yo, I want 50% in 3 months. And I'm like, that's not possible. I mean, we just showed you how much you made in Sivody. It's 100 and whatever percent in less than a month. It's not that it's not possible, you know. It's just that sometimes you're gonna have to put in work to understand it. So I think that's the problem. So some people will say they want the 50% in the 3 months, the 100% in 3 months, but then they may, like, you need to understand that to get those kind of returns, a lot of times, especially in a safe way and repeatably, you're gonna have to put in a lot of work. It's possible, but you
just have to pull it done.
No, but the problem is that some people will say they want that, but then the level of work that they can put in isn't that much. So imagine I'm not saying, like, if you're very busy with work, you can't, you know, put in as much time as you might need to get those kind of goals. That's why you sometimes kind of have to be realistic. So you have to say, okay, I know I'm not someone who can be reading every day or reading. It's kind of, I'm just going to DCA or dollar cost average, just put in some money and just piece. Then maybe the type of returns I should adjust my goal. I should be kind of realistic with my goal, because that's one of the, you know the acronym SMART goals. I'm trying to remember if it's the
R.
Hold on. See, somewhere says there's different definition, because somewhere says R is relevant. This one says R is realistic, but you kind of have to be somewhat realistic. Be honest with yourself too, because
you can't do it. That's why there are advisors. That's why we have financial advisors. You just have to find a good one.
But the thing is, it's also hard too. So it's like if you say an advisor to give you like 100% play in 3 months, sometimes to doing that 100%, you might have to be also adding your own monitoring it, you know, like you have to also add in something.
Yeah, I'm not saying no, but you need to look at all avenues. If you really want to make money, you have to look at different avenues, right? If you can't do it alone, shout an advisor. If you need an expert, there are financial advisors at whichever brokerage house you use, or some that are independent. They have their own independent license. Big up Danai. We should actually drop Danai's website in the show notes. I think it's dhalladvisory.com. Yeah. So far, he's the best advisor I've heard of. You should read his testimonies and so on. If you guys want a good advisor, link him, honestly. So I hope we answered that question.
Kind of like the person would have to really, you have to be very, what I just say is just be very honest with yourself. Sit down, think of what kind of money you actually want to make from this. And then that will help you to personally determine how much you want to put in, because everyone's answer will be different. Some people, $10,000 is their first investment. Some people are $100,000. It also depends on your situation too. How old are you? How much disposable income do you have? Are you someone who's earning $100,000 per month, or are you earning $1 million per month? things like that. If you have kids, lifestyle, if you're debt, all those things would
Are
help.
you a
determine.
student? Right? Are you even making money? Are you just using your savings?
True. Yeah.
How much money are you really willing to risk? Those are all real questions you need to have with yourself. So, yeah. I wish more people ask those questions. Yo. If you guys have questions, I think Preston is going to set up something on the website where you can ask questions in the like a comment section.
You can ask questions anonymously, and then we can answer them hopefully on a future episode.
Yeah.
You said there was another question?
Another question was blue chip stocks on the JSE. Not sure what exactly. He's asking. Maybe he's asking what are the blue chip stocks. Blue chip to me means just like a very reputable company, like a big company, like a. Give me a blue chip stock on the JSE. Grace Kennedy. I think a lot of financial advisors, when I just started, they were just like, "Yo, buy Grace, buy this, buy that."